Well, hello there. Welcome to WTF Dana Point, or the weekly trend forecast for Dana Point. This is the weekly show that grabs last week's real estate data so we can start this week with a better idea of where we might be going. If we haven't met, my name is nathannecochea. I'm a realtor here in Dana Point. Think of me kind of like your personal translator, except a little bit more fun. I'm here to really just bring you the information and help you understand what that information might mean for you, potential buyers or sellers, where the opportunities might lie. What I'm not here to do is make decisions for you. With that in mind, you should definitely buy or sell now. So let's get into the data for the week ending September 20th. Thanks to our pals at Altos Research for doing all of the work, so then I can just read the numbers. Starting off with the overall picture, the Market Action Index. Last week, Dana Point ended with an MAI of 36. Now, that's a baby step higher than the previous week's 35. And what that means is that the rate of sales slightly outpaced inventory. In fact, overall inventory dropped from 64 to 62 homes, which is a sign of increased demand. The average percentage of price decreases for all four market segments sits at just 29%. Again, in a typical run-of-the-mill market, we'd see between 30 to 35% of listings taking a price decrease. So last week, we were basically normal, but still just a tick under. Kind of like how AI images look real, but there's always something that's off. Like, maybe the character has 7 fingers or maybe a third leg. They look kind of normal, but not quite. One metric we should look at with price decreases is price increases. Now, price increases sat at just 3%, and that's a good number. What we're looking for with increases is anytime we push over 5%. That would be a sign of exploding demand or heavy investor activity in the market, as they fix and flip their homes. With the data we have here, demand is strong enough at current prices, and sellers aren't really coming out swinging for the fences. They're pricing pretty accurately. Now let's take a gander at what happened last week with each of our market segments. Now keep in mind, as inventory changes, the median price within each market segment changes a little, so there will be some fluctuation from week to week. Anyway, our bottom segment saw 4 new homes hit the market and 4 homes absorbed. The lower segment didn't see any additional inventory added or absorbed. The upper segment added 1, but then also lost 1. And maybe the biggest shocker last week was our top segment, where the median price is about $20 million. That segment saw 1 home added, but 3 homes absorbed. Okay, so here's my quick breakdown and super smart analysis. The market was actually heating up last week with more sales demand and not a lot in the way of new inventory, which is kind of the opposite of what we would normally expect to see this time of year. Even with demand having been really suppressed over the course of the past, 2 years, we just haven't even begun to see a sufficient supply of homes. And that's really just led to a kind of a pretty long run of increasing prices. Last week, we also got some decent news from the FOMC in the way of a 50 basis point cut to the federal base rate. Again, the base rate and mortgage rates are correlated, but it's not a one-to-one correlation. It's more like how between 1999 and 2021, the air pollution rate in Memphis correlated to the marriage rate in Tennessee. See? Love was really in the air. Anyway, with the FOMC's cut, I'm expecting to see buyer activity pick up some, even though we're probably not going to see huge changes in mortgage rates right now. We will see some decrease, but I think more importantly, the Fed has heavily implied an additional 50 basis point cut this year with another full point through 2025. I think this is going to be enough to encourage buyers and believe that see them walking back into the real estate market pool. I'm not saying in any way that they're jumping in with both feet, though. It'll be more like a slow immersion, while they get used to the water's temperature. So for anyone thinking about buying a home, you're probably still feeling unsure, and you're probably hoping prices will go down in the fall and winter. Unfortunately, I don't think that's going to probably happen. What I think is going to happen is, well, yes, a lot of buyers are going to wait until next year. The only issue I see there for them is that it comes down to supply and demand. As long as our inventory is being absorbed and price decreases aren't pushing beyond normal ranges, home prices are going to continue to increase, which means buyers need to consider whether holding off for a lower rate outweighs the potentially higher price they may have to pay for the same home. And not to mention the additional competition for that home. Now, sellers in Dana Point continue to be in a strong position. You face little in the way of competition, and demand is still holding pretty strong. With more buyers acting on the Fed rate cut, sellers have an interesting dilemma. First, as far as when the best time to sell is, it really depends on you. If you wait until the selling season next year, you'll definitely face more competition, just because, well, that's when we usually see the most new inventory. If you sell now, your competition is less for an increasing buyer pool. Now, you might get more from your home if you hold off, but are you buying a replacement? If so, then you have to consider whether you want to compete with not only more sellers, but also more buyers. If you can get more next year, will it be enough to offset how much you'll be paying for your replacement home? That's a lot to consider. Don't forget to hit that subscribe button for more real estate tips, a few more bad jokes, and a healthy dose of some sarcasm. If you have a question or a suggestion, drop a comment below. Let me know if you think we'll see an extended transaction season this year. Until next time.